Good afternoon, everybody. It's a pleasure to have you all here today. Thank you very much for joining on this annual event of looking at the Emerging Venture Market Report and the data from it. Today, I look to run through the latest report findings, looking back at 2022 and sharing some of the insights that we have to look forwards into what might be happening in 2023 and beyond. As always, if you have any questions, if you would like to share them in the chat or in the Q&A, we will make sure to get through to them later after the presentation. We will look to cover a variety of questions and answers as part of the exercise. Jumping straight into the report, if you haven't managed to download it already, you can download that for free on the MAGNiTT website. We will be looking at what we cover. So as MAGNiTT, we cover the Middle East, Africa, Pakistan, and Turkey, and we're the leading platform for verified venture capital data in that space. Let's start with what happened in 2022. So at a high level, 2022, in my opinion, was a very turbulent year. Challenging for the VC ecosystem globally, but also in the regions that we cover. Lingering pandemic, the Russia-Ukraine war, soaring inflation, monetary tightening, stock market corrections, tech layoffs, and the crypto crash are some of the thematics, just to name a few. I will put some context around some of these themes before jumping into the data. Starting off with inflation. If you look at the inflation that we saw in 2022, it reached 8.8%. That is the highest levels dating back all the way to 2008, one of the recent crashes that we've seen in history. And that has really been a key driver of many of the impacts and the domino effects of what we've been seeing in the global economy, the markets, the public markets, and now into the private markets. To combat that, we have, in this particular instance, US interest rates. As you can see, after what happened in 2020, where stimulus was really driven to try and drive liquidity in the markets, interest rates have continued to rise aggressively, almost reaching the 2007-8 figures, now close to 4.5%, with many estimating that that will continue in the quarters to come. What does that mean? I'm an avid fan of the All-In Pod, and David Sachs mentioned the crowding out effect, something that I shared and highlighted. If interest rates are getting close to 5% for fixed deposits, with corporate bonds being offered at close to 8 to 10%, the expectations for what you would be looking to get in terms of equity investments will then need to be in the region of 15%. You're now expecting VC returns, as David Sachs said, at close to 25%. And therefore, there's the risk of crowding out of innovation and ideas, specifically with the expectations of what those return on investment should be moving forwards because of the opportunity cost of what exists in the market. When you just look at the public markets themselves, the impact of 2022, the economic slowdown and the increase in inflation and interest rates, as along with the other scenarios that we've mentioned, you've seen the NASDAQ alone saw a 33% drop in 2022 after what was a rally dating back all the way to 2020 at the onset of the pandemic and the subsequent monetary push and liquidity push into the market. Even when you look at individual tech stocks, many of the big names that we've seen at a global level have seen decreases in their values of almost up to 90%, specifically in the crypto space, but even large big tech companies seeing the likes of 30%, 50%, and 66%. And even if you look at some of the regional startups that have seen listings, big declines in the value of those companies. One metric that I always like to look at, again, something from the All-In that was highlighted in the last couple of years, you saw the SaaS Capital Index multiple, i.e. the multiple that can be applied to the revenue to kind of give an indication of the value of the companies in the last 2 years, going all the way up to about 12x multiples, has returned now back to pre-pandemic norms of about 5x. So what does this mean for the impact on the venture capital space. We've also seen, as a result of some of the tightening of businesses, that across the globe, many names, including those in our region, have announced layoffs for startups, as well as shutting down many of the companies that are beginning to happen. So it's not just an investment landscape issue, but also in the context of having to have layoffs in many of the companies, if not shutting down operations to be more cost efficient in what is becoming a tightening of the funding landscape. So how does that really impact the global economy and the emerging venture markets? Well, if you just look at the emerging venture markets, again, that's Africa, the Middle East, Pakistan, and Turkey. On its surface, if you take the figures of 2022, it is only a 2% decline of funding to 7.2 billion and a 4% decline in the number of deals. How does that compare to other regions? Well, if you take CB Insight's recent report, you'll see that there was a close to 40% decline in funding in the US and a 7% decline in deals. Europe saw a 17% decline in funding and a 2% increase in deals, almost flat. Looking at other, shall we call it, emerging markets, Asia saw a 40% drop in funding against the backdrop of a 5% drop in deals. LATAM saw a 62% drop in funding against the same number of transactions. And now looking at the regions that we cover, MENA saw an, in fact, 8% increase in deals against the backdrop of an 8% drop in transactions, while Africa saw an almost flat amount of capital that was deployed against an almost flat number of transactions. Now, we will delve into all of those numbers, but this provides a little bit of the context of how it compares to global markets. But when we focus on what is the main focus of this presentation, the emerging venture market space, what does that look like? As I mentioned, on the surface, a very positive year. $7 billion of capital that was being deployed against a drop of almost 2% in transactions. Record numbers compared to previous years. When you break that into the different geographies, you can see that there are positive signals that you see in terms of funding, albeit against the backdrop of many geographies seeing a slight decrease in the number of transactions. But I think this is the chart that will lead much of the presentation. A lot of this can be attributed to the hangover effect of the investment landscape that was happening in 2021. So Q1 2022 was a record quarter by all means in terms of funding. You could see $3.5 billion of investment, which equates to almost half the amount of funding in 2022 was recorded. Now, let's call a spade a spade. In our region, we often see that there are delayed announcements, that deals can take up to 6 to 9 months to come to fruition. Impact of global markets doesn't necessarily come and impact our region as quickly as it does potentially in the US and Europe. To prove that point, if we take CB Insight's report, you could almost shift the impact of what we were seeing here in our region and go back one quarter, i.e. Q4 of last year, and this is the global funding in terms of the funding landscape, was a record quarter in terms of invested capital that then saw progressively 4 quarters of decline. And therefore, if you take what we saw here in the MENA region and apply that 1 quarter forwards, you see the same type of impact in this region. And therefore, if you moved Q1 backwards, you actually would have seen likely a decline in investment activity and deal flow in 2022 compared to 2021. When you look at the mega deals, again, an indicator of late stage investment growth, on its surface, almost the same number of transactions in 22 as 21, with a slight drop of 20% in the amount of capital that was deployed in deals that were greater than 100 million. But again, when you delve into the details, 6 of those, almost 50% of them, were in Q1 of the year, and 9 of them came in the first 6 months. So you can see, again, many of those are the spillover effects of what happened in 2021 being recorded into 2022. One thing that is interesting to note is that clearly in 21, there began to be a pickup in late stage activity in terms of number of transactions that did trickle through into 2022. But our opinion is that the sweet spot has remained at the 1 to 5 million investment space. And I think that's one of the predictions that I'll come on to highlighting moving forwards. Those that are not necessarily very risky at the early stage, a slight drop off in investment activity at the late stage, and the real kind of sweet spot of investment remains at the 1 to 5 million ticket size. Again, this is for the whole emerging venture market space, not one specific geography. So how does it compare across the geographies in the regions that we cover? So we have on the left-hand side, the evolution of funding year on year for emerging venture markets on aggregate. You'll see that the trend is somewhat similar for Africa and MENA, that you have seen progressive growth in terms of funding, but 2021 and 2022 saw almost flat number of transactions across the 2 years. In fact, when you look at the actual investment year on year, exactly the same landscape that I highlighted coming from the global aggregate level of EVMs is applied at the funding level for Africa and MENA. But when you break it down into the quarterly evolution, again, you'll see what was a strong start to 2022 was followed by drops in deal flow to the rest of the quarter. Similarly, in terms of funding, what was a strong Q1 is then reflected in subsequent drops in funding for Africa, a slight pickup in the seasonality for funding to record a stronger end to Q4 in MENA, but I'll come on to discuss that in a second. So again, a charted view here of what the impact is for our regions, including Pakistan and Turkey, compared to the US. You'll see funding was relatively flat against the backdrop of a slightly higher drop in number of deals compared to what's been benchmarked in the global landscape. Speaking about this seasonality effect, in fact, this is one of the things that you can now do on MAGNiTT. We have a seasonal funding predictive tool. We actually started circulating in our newsletters and social media that what we're beginning to see specifically in the Middle East is a seasonal trend. In fact, when you take the 3 years of 2019, 2020, and 2021, the average decline in Q3 funding was about 48%, and 2022 saw a drop of 38%. So somewhat in line with what was predicting in terms of historical trends. That's then subsequently followed by an increase again in Q4 of about 49% in funding for the MENA region. Historically, it was a 69% pickup in Q4. So when you look at that trend, if you account for that seasonality and smooth that out, you actually do see progressive quarterly declines in funding for the region. What does that mean for deal flow and ultimately valuations? Again, it's somewhat difficult when you look at it in terms of mean, because you did see some big mega deals that came through at the end of the quarter. But when you look at it from a medium perspective, it's clear on the right-hand side that Q4 deals saw almost in both of the geographies of MENA and Africa, a decrease in median deal size for our regions compared to the Q1 of the beginning of the year. And if deal size is an indicator of valuations, then it is clear as the year developed, that valuations also began to drop in terms of the transactions that were being reported. Let's look at some of the specific country changes that we began to see. So when you rank all of the countries in terms of the number of transactions, interestingly, Turkey saw an increase of about 6% in terms of deal flow, followed by Nigeria, Egypt, which moved 1 rank up compared to the UAE, and Saudi Arabia. The average across the top 10 deals saw a 1% increase in terms of deal flow. So in reality, an almost flat level number of transactions in 2022 compared to 2021. But when you move on to funding, there's a couple of things that are interesting to note. Mega deals were the key driver to Turkey, UAE, and even Saudi Arabia growth of funding. In fact, I asked the team to highlight what those deals were, and you can see that although Turkey ranked first in terms of the total amount of capital that was being deployed, 70% of that capital came from investments in Getir, Dream Gains, and Insider. So when you remove that, it's almost in line with, shall we say, South Africa or Pakistan. Even the UAE saw that 32% of that funding came from an investment in EMPG and Pure Harvest. And 40% of the growth in Saudi Arabia came from 3 deals that were above 100 million. Having said that, it's very interesting to note that Saudi Arabia was the only geography in the top 3 to see a year-on-year growth of about 72%, increasing its ranking to 3rd and closing the gap with the UAE and Turkey in terms of funding that was deployed into startups that were headquartered in Saudi Arabia. But when we look at the quarterly evolution in terms of investment activity, many of the same trends we saw at the aggregate level apply now at the country level, some more acute than others. Turkey, interestingly, seeing continued growth in deal flow, but the UAE seeing a stark drop-off in investment activity to year-end, with progressive quarterly declines starting from Q1. Egypt, similarly, with Saudi Arabia seeing a slight rebound in investment activity. Pakistan, for instance, that saw such growth in 2021, saw a specific decline in investment activity throughout the year in 2022. Looking at the funding landscape, again, many of the similar trends with slight seasonality that we mentioned in both UAE and Egypt, but Saudi Arabia, despite the growth of 72% increase in funding, seeing progressive declines in investment activity. Turkey, the anomalies of those mega deals, all of which came in Q1, highlight that if you were to strip out that 70% of funding attributed to mega deals, then in fact, this goes flat all the way back to 2021. So it'll be very interesting to see whether those mega deals, which are very late stage investments, will continue into 2023, and whether the strength of the Turkish ecosystem has been historically driven by those kind of almost outlier investments in late stage deals. How has this investment activity kind of impacted deal terms? So one of the things I'm pleased to say is that if you go on the MAGNiTT platform now and you're a subscriber, you can see proxies for individual investor participation, but also valuations. In this presentation, we don't specifically speak about the valuations. We will be bringing out a report next month on valuations. But what we do have is an indication of the driver towards valuations, i.e. the size of deals. To start off with, let's talk about the late stage deals. As I mentioned, those mega deals, here you can actually see the attribution of the top 5 deals in each of these geographies. In MENA, it's now attributed to only 26% of all deals, the funding coming from the top 5, down 28% compared to 2021. In Africa, it's attributed to 25%, the top 5 deals, down 32%. So you can see that that concentration and late stage investment has been starkly reduced. In Pakistan, it's a 10% increase year on year to 52%. So a high skew and concentration towards late stage or mega deals. And in Turkey, almost 77%. So up 7% when you include the other mega deals in Turkey, is attributed to large deals in the geography. When you break down the mean stage investments, that has seen, because of those large stage investments in the MENA region, that late stage Series B has seen an increased growth. In fact, at all stages in terms of mean investment, because you have seen specifically in Q1, quite heavily skewed by the investment in Q1, increases in mean size. But when you look at it at a median level, you can see the early stage remained somewhat flat. And in fact, that Series A, the median size dropped in 2022 compared to 2021. Similarly, when you look at the mean for Africa, you did see a drop in the mean size of investment deals at Series A for African investments, late stage, similar to MENA, increasing, early stage increasing at the mean level. But when you look however, when you compare it to the median level, all 3 of the stages saw increases year on year. Looking at specific geographies, here again, 4 out of 6 countries saw Q4 levels lower than Q1 investments. And again, when you see that Egypt and in the UAE increases in Q4, those were largely driven from large late-stage investments because we clearly saw a drop in the number of transactions. So while the number of transactions decreased, the average mean may have increased, skewed by some outliers of big investment deals. But 4 out of 6 geographies saw Q4 investment deals on average lower than the beginning of the year. Again, when you look at it from a median perspective, 4 out of the 6 geographies saw Q4 median investments lower than those of Q1, all of which highlighting that there is likely a correction in the valuations of many of these companies, which is likely to only continue in 2023 moving forwards. At an industry level, the story is very simple. Fintech, fintech, fintech. I've been talking about this probably for 12 months, if not 18 months. In fact, when you look at the data at an aggregate EVM level, the total number of transactions in the fintech space is almost exactly equal to the number of transactions in e-commerce and transport and logistics combined. So investor appetite in the financial technology space seems to be very strong. Similarly, when you look at it in terms of funding, exactly the same. While there's a slight drop, and only today you saw that trend continue with the announcement of Tabby's investment, the total amount of capital that was deployed in the fintech space is again equal to the transport and e-commerce landscape across the region. If we look at the investor landscape, it's interesting to see a couple of trends. Number one, interest from international investors in the region that we covered has grown, if not increased, has maintained, if not increased in 2022 compared to 2021. The MENA region, almost 43% comes from outside of the MENA region. In Africa, 72% coming from outside of the region, up 20% compared to last year. 82% of investment in Pakistan is driven by international investors, and 41% comes from investors from outside of Turkey. Even when you look at the number of investors investing in each of those geographies, you can see that in MENA, Africa, and Turkey, there's been an increase in the number of active investors, which can be private equity, venture capital, CVC, accelerator programs, agent groups, year on year compared to 21. So specifically, as we enter a slightly challenging economic environment, it's good to see that at least the international interest in our region and the number of different type of companies investing in our region continues to grow. Just to highlight 2 charts, you can now track on MAGNiTT using the analytics tool, the number of transactions and the ranking by stage, by country, by industry. And so in this particular case, the top 10 most active investors across all emerging ventures are ranked here. Interesting to note that 6 out of the 10 most active investors have actually deployed capital across multiple geographies. One of the trends that we continue to chart and view is that investors are not only focused within specific regions, but across the wider region. As we break down the silos that exist in these regions, we see that investors are growing their interest into Africa, Middle East, Pakistan, Turkey, and the cross-pollination that exists across those markets. One thing that we're now also pleased to share is that we also chart the rankings of investors, not only by the number of transactions, but the amount of capital that they have deployed in these markets. So here you can see the full list of the 10 most active investors across all emerging venture markets by the amount of capital that they've deployed. This can be filtered on the platform by, again, country, industry, stage of the startups and the headquarters of those startups. But it's interesting to see that the top 10 most active by capital deployed account for 13% of all funding that took place across emerging venture markets in 2022. A couple of other interesting charts that we've now started to add to the suite of information that we share. In the Middle East, 47% of investment capital deployed came from Middle Eastern investors, but 29% came from the USA. When you look at it from an Africa perspective, 51% of all investment capital came from US investors, whereas only 13% came from Africa specifically. So for each of these, it's interesting to show that there is a different kind of breakdown of investors in terms of the capital that's being deployed and where they're headquartered. But also interesting to note, in Africa, 7% actually came from the Middle East. One thing that I always find interesting to look at is the exits. Now, I've mentioned many times in previous webinars, exits is the holy grail. The ability for investors, startups, the employees of those companies to see the success of the startup exits is important for the growth of the ecosystem. And at its high level number, it's interesting to note that we saw 36% increase year on year in the number of exits, namely M&A activities that are taking place. Across all of the geographies as well, except for Africa, we recorded that every geography saw an increase in the number of exits that were seen in 2022 compared to 21. One thing to consider, though, is that as we enter this challenging economic environment for fundraising, are these successful exits in terms of ROI, or are they mergers for consolidation or opportunities for investors or startups that are coming outside of the region to get market access as we see consolidation taking place in the ecosystem? One thing that I do find always interesting to look at is what is the cross-pollination effect in the market. And what we can see here is broken down by the geographies of the acquired companies. There is beginning to be a cross-pollination across different geographies. UAE, Saudi, examples of companies entering into Turkey through acquisitions, Pakistan acquiring UAE companies, African companies acquire sub-Saharan African companies acquiring North African companies, as well as kind of geographical consolidation across the market, all of which pointing to the opportunities that exist in this current market for inorganic growth as companies are likely to see valuations drop in the current environment. Before closing out the presentation, a couple of the things that I would like to highlight is the predictions that we view. I've already pointed out in the presentation that we're beginning to see a decline in the deal size. We're also tracking valuations. This is done through investor sentiment, where we're speaking to multiple investors to ask them their views in the dilution effects, as well as tracking the deal size effects of valuations in the ecosystem. One thing that's clear to see is that we are likely to see valuations in the market come and return to pre-pandemic norms, if not drop below pre-pandemic levels in terms of valuations in the ecosystem. The second is that we're likely to see a record year of mergers and acquisitions. We already saw that take place in 2022. But as we see startups likely to find it challenging to raise specifically late-stage investment, but even early-stage investment, the opportunity for companies that are unable to raise funds to merge and consolidate to become stronger as different entities is likely to lead to another year of record exits, specifically when you look at the opportunities that exist across specific markets. We've spoken to many of our clients that are VCs and identified opportunities that may exist in Africa, the Middle East, Pakistan, and Turkey that match the type of companies that exist in their portfolios. We can support in identifying those, and that's likely to lead to inorganic opportunities in 2023. Wider geographical investment divergence. Geographies that have strong focus on innovation at a government level are likely to seed initiatives to drive fund of funds and investment in the ecosystem and support of that growth. That is likely to see increase, if not stable, investment in the markets. Those that don't are likely to see the investment landscape challenge, and therefore we will see a widening in the geographical divergence of investment that's going to be happening across the wider emerging venture market space. One thing that we're particularly interested in is the interest from Southeast Asia and the wider Asia continent. We have already, as MAGNiTT, had many conversations with trade authorities, conferences, and investors that are coming from China, Japan, Southeast Asia that we had already, and I had said this back in 2019 and 2020, been engaging with them. But given the COVID restrictions that were put in place and the challenges for travel, that began to slow down. With many of those challenges, restrictions being lifted, we are expecting that much of the interest, specifically with the arbitrage opportunities that exist in the next couple of months, to be coming from Southeast Asia. And in terms of where is the sweet spot for investment, from what I've been seeing, number one, the change in the deal flow terms that are coming for Series A investment, from the sentiment of risk off and many investors focusing on their portfolios, and those with dry powder likely to find that Series A startups with companies that can find product market fit, a clear path to monetization, if not unit economics and profitability, are likely to be a sweet spot in the seed Series A, where valuation and deal terms have come back in the favor of investors, is the area that will see continued growth, with the challenge going towards late stage investment. Before we jump into Q&A, and I ask any of you that are interested in sharing your questions, please do share in the chat or in the Q&A box. How can we help you with MAGNiTT? A couple of the features that I think are interesting for any of you that may not be aware. You can now have full market map views from the directory of any of the industries, countries, or geographies that you're interested in, so that when you filter your search, you can see that in directory view, market map view, and charted view of funding evolution to allow for better identification of companies. You can even use this tool if you're an investor, select all of your startups and create market maps of your portfolios and track the evolution of funding of your portfolio on MAGNiTT. We've developed this advanced analytics tool. Every chart that I've shown you in this presentation and in any of the research reports that we publish are available in real time on the MAGNiTT platform, which you can filter and change based on your specific interests, whether it's fintech in Saudi Arabia, whether it's e-commerce in Africa, whether it's a specific investor ranking by the headquarter of companies in specific geographies, or the deal terms that we mentioned, whether it's valuation or deal size across quarters in specific industries and stages. You can now also access in all of the directories and startup profiles, startup valuations and proxies for those for each of the investment rounds, the individual investors' deployments for each investment round, historically only recorded on aggregate. Now you can do that by individual investment rounds, and you can get exportable contact details of the founders of companies that are listed on the platform. So if you're doing business development or trying to identify startups or investors for the purposes of reaching out to them, you can access those details on MAGNiTT. And finally, for any of the institutions, and we have some clients that are interested in this, getting direct APIs to integrate into CRM tools or potentially platforms to highlight data that is recorded on the MAGNiTT platform, please reach out to us and we'll be more than happy to facilitate those. And you can either reach out to us for any of these features at sales@magnitt.com, or using the enterprise form on the MAGNiTT platform, you can reach out or ping me directly. I'll be sending a summary of this presentation and the recording of the video, and I'll be happy to connect you with anybody from our team. So with that, I will stop the presentation and I'll be more than happy to answer any of the questions that you have or that I can answer through the webinar. First question, do you have the cap table data shown on MAGNiTT? Has the percentage of investment changed last year when compared to 20 and 21? So we do not have specific cap tables on the MAGNiTT platform. We have the percentage valuation proxies for each investment round. That is recorded on the platform, but not the cap tables. But what we have seen, at least for 22, is that the dilution effect hasn't changed much. The round sizes have, but we are expecting the dilution impact to begin to come into 2023 and beyond. In fact, we're going through an exercise now of charting how much the dilution, for instance, let's take for the sake of argument, of a seed round investment in 2018 and how different a dilution of a seed round was back in 2018 compared to 2021 based on a survey of investors, and then integrate that into the platform and continue to do that analysis moving forwards on a quarterly basis. So the valuations are driven in line by deal size as well as the sentiment for dilution in the market. How do you think that the economic situation in Egypt has affected Egyptian startup ecosystem? Well, it's very difficult to say. What's been clear is that the currency devaluation has led to challenges for companies that are looking to raise in the geography. For those that are operating out of Egypt but receiving funds from outside of Egypt, they can continue to see growth and development of their business opportunities. But many of the Egyptian startups are looking at opportunities to scale to sub-Saharan Africa, and many of them are coming to the UAE and Saudi Arabia to raise funds, which is an interesting phenomena that's happening across the wider ecosystem. It speaks to the geographical divergence of funding that I mentioned, whereby countries that are specifically focused in supporting companies to scale into their geographies with the benefit of funding are seeing increased funding in terms of growth. Those that aren't able to match that may be seeing challenges moving forwards. Do you have any insights on the funding female-founded businesses? Yes, we do. We'll be putting out a piece on that in the months to come. In fact, one of the charts that I mentioned in the analytics tool that will be integrated on the platform will be specifically around how can you filter for, so you can do this on the directory and now on the analytics charts, how much funding is attributed to female-funded startups versus male or mixed founded startups. And we'll be putting a piece on that specifically in the next couple of weeks, but that data is available on the MAGNiTT platform. The layoff of companies which have raised capital is quite on the higher side, especially over the last 2 quarters. Is this related to the pressure from venture capital? Do you cover any stats around this? So do we cover any stats specifically around this? We continue to track companies that have had layoffs. We have not integrated any stats specifically. What I can speak to anecdotally, and I can't speak to in terms of numbers, as in a data platform, I always like to speak to in terms of numbers. What is clear is that funding is likely to continue to decline into 2023. Many of the economists or people that I listen to from international markets and in regional VCs are predicting that the decline in funding is likely to continue until the second half of 2023. If it's harder to raise funds, it means that many companies that are VC backed are likely to have to cut their runway or cut their burn so that they can increase their runway. And the only way that you can do that, with many companies likely to have employees attributing close to 80% of their cost, is by being more cost efficient with employees. And therefore, that is the key driver as to why many companies are looking to lay off in this current environment. And it is likely that that is going to continue in the next 2 quarters until we start to see a rebound in the investment activity. Unless companies look to raise bridge rounds, seek alternative funding through venture debt or potentially grants, but that is likely to continue into Q1 and Q2 of this year. With all what has happened in 22, what are the main factors that affect the internationalization of VC from developed markets to emerging markets? I think it's quite interesting because if you look at the valuation metrics that I mentioned, number one, the arbitrage opportunity that exists. Everything that I mentioned is showing a slowdown in investment activity of what's happening in the US. But 2 things are taking place. Number one, as valuations continue to decline in the region, probably more aggressively than what's happening in the US or Europe, the opportunity and the arbitrage opportunity for that investment capital becomes interesting for international investors. The second, and only today, Bloomberg brought out an article about how sovereign entities in the likes of the UAE and Saudi Arabia are attracting and encouraging international investors to come to the region. One of the conditions by which they do that is for them to set up, or at least a portion, part of the capital that they're going to be funding them with, to invest in our region. And therefore, as a result, many of them will continue to invest in our region, attracted by the ability of getting LP funding from sovereign entities that are benefiting from high oil prices in our region. Also, let's not forget the increased awareness of many of the companies that we're seeing, and the success stories that are coming out of the region make it interesting and less risky than we have seen in previous years. You mentioned 2002 had a record exit. Do you have a breakdown of the exits? How many of them are successful in terms of return of investors? So, as I mentioned, we are now tracking valuations. We are now tracking the individual capital deployed by investors. As we continue to develop the MAGNiTT platform and the product proposition, we will look to work towards doing ROI of those investments. But to date, we don't have that specifically in terms of returns, but we do capture how many of them are M&A versus IPO or other types of listings. But with time, once we improve the data set of deployed capital valuations, we'll be able to better accurately work out the return of those investments as well as the return on the funds. We're doing an exercise right now on the fund of funds and the LPs of the GP funds here in the region. Once we put that onto the platform, we can better manage the fund sizes that have been announced and then the return on those investments. So all things that we're working on the next 6 to 9 months. Thank you for Mohammed mentions, great job on the advanced analytics tool, a step in the right direction. However, when do we expect to have the full freedom of building charts that are not predefined? Let's say I want to see industry split, not just for 5 industries. Some of the charts accessible before on discontinued chart tools are not covered under the analytics tool. Great feedback. I will share that with the team. Our goal is to empower our users to be able to create custom charts. At the moment, we're gathering feedback from our customers and users. Ultimately, using the tools that we've integrated to create these tools, we want to make them as customizable as possible. If you have specific features or requests, please speak to the account manager or to the data team, and we'll be happy to see how we can develop those. But our goal with time is to make them as customizable as possible. Would also love to hear your thoughts about the impact investing landscape in the region. Well, 2 years ago, we did a report with Wa'ed on the impact investment landscape. We saw growth in the impact investment landscape. I think one of the challenges is defining what companies are impact investing. One of the things that we would like to do as a filter on the platform, we can't have sustainability, but whether we can capture ESG as a filter on the platform to help us chart that moving forwards. Currently, we don't have that as a filter, but we do have sustainable investment on the platform, and that's something that we can share in terms of the growth of that specifically. What is the relative size of EVM compared to other regions, Southeast Asia, LATAM, Israel? So let me go back to the presentation because I had that on one of the slides early on. So to answer that question specifically, in 2022, sorry, let me just share. So if you look at LATAM, EVMs, the emerging venture markets covering Africa, Middle East, Pakistan, and Turkey, was almost the same amount of capital as LATAM. Interesting, because that used to be almost 62% higher, or it's 60% down this year. So clearly the Latin American market has seen considerable decline in terms of investment activity. Asia, though, is multiples of the investment landscape of what we're seeing here in the emerging venture market space. But again, if you were to compare MENA or Africa, both of which are 3 billion, they're half the size of Latin America. So I still believe that there's a long way to go in terms of the funding capabilities. And even when you look at an individual country perspective, we're only scratching the surface in terms of the investment landscape. And there's still a huge amount of opportunity for venture capital in our regions. One of the concerns that I have is that given everything that I mentioned in terms of the economic impact, is that the government focus, and I talked about the economic divergence or the venture capital divergence by geographies, that now venture capital and startups doesn't remain a priority, or innovation doesn't remain a priority for governments moving forwards, that there'll be a slight slowdown in that investment landscape. But some geographies, Saudi Arabia, as a strong example, have very clear visions for the growth of the venture capital ecosystem and development, and it's likely that they will continue to grow from that perspective. What's the opportunity do you see from the Russia war, increased investments in Middle East and Southeast Asia? Do you think this will continue in the next quarter? Well, it's been difficult to try and see what the impact of the Russian war has had on the investment landscape, specifically for our region. Anecdotally, again, if you speak to or see walking around in Dubai, you can see that there are more startups that have been relocated in the free zones like DIFC, DMCC. So many of the companies that have been operating in Ukraine and in Russia have come and set up. Clearly, for the deployment of capital, there has been interest in what's happening in the emerging venture market space, not necessarily specifically in Middle East, but also in Africa and other emerging venture markets. So that there is some capital that's being deployed there, albeit the challenges of liquidity getting out of the likes of Russia and Ukraine, making it difficult for that capital to be deployed in our region. So I think it's very difficult to say with confidence what the impact of the war has been. What some of the downside of the impact of the war has been when you look at countries like Egypt, which were quite clearly impacted by the exporting of grain and the challenges that have been restricted there. There's been more negative impact than necessarily positive impacts, but again, difficult to say with confidence what will happen in the next quarters. Please, can you expand on the feature for your limited partner tracker? So, well, now that we have gone through an exercise of mapping all of the fund sizes of the VCs on the platform, for interest, we reach out to over 2,000 investment firms, whether that's VC, corporate venture capital, CVC, and the likes, on a almost monthly basis to make sure that the data that you see in our report is up to date and relevant. We have then mapped out for all of them and asked them, what are the fund sizes, or if you have multiple funds, how many funds you have on the in terms of VCs or companies that have multiple funds. Once we have the fund sizes for each of those funds, or for the VCs that have single funds, we have also gone out and asked LPs of those funds if those that are available from the public domain through data scraping, and or speaking to regular LPs that are disclosing those funds, whether the likes of Adia, Mubadala, sovereign funds, or listed funds, as well as speaking to people that we know from the community. We will now map out on MAGNiTT an LP tracker of those funded funds or funds that are investing in the GPs, so that you can identify not only in the same way as we see a VC invests in a startup, but the LPs that are tracking investing in the VCs on the platform and the funds that they've invested in, as well as the capital that they've deployed into those funds. So those are some of the features that we're going to be further developing onto the platform for you to be able to get access to. Two of MENA's first unicorns are no longer billion-dollar companies, and Swivel seems to be a serious risk of delisting from the NASDAQ and insolvency. Do you think that the region can still follow the positive trajectory of other emerging regions like Southeast Asia and produce long-term pipeline for unicorns? Or should we be looking at the region as a source of long-term 100 million, 1 billion profitable companies and occasional unicorns? Look, this is something that I have debated. The obsession with unicorns is one that I believe is somewhat unhealthy. I can see the benefits of it. I think that the pursuit of unicorns allows for governments to try and drive employment figures, can look for policies to try and drive companies that can grow successfully. But unfortunately, a unicorn can be created by giving a company $300, $400 million of investment. But how many unicorns are realized unicorns versus paper unicorns? The reality is that we have only seen Kareem as an example of a realized unicorn from our region. I think more focus should be looking at companies that are unit economically stable, that have successful exits for the VCs, that have a higher percentage attributed to GDP from the revenue that they're generating as companies. Those are metrics that are kind of better indications of the growth of the ecosystem than the pursuit of unicorns. Unicorns can create media awareness, they can create buzz. But I think that for us to see continued growth, we need to see VCs in our region seeing success and ROIs, founders of those companies seeing the success and the light at the tunnel to inspire and drive other companies to continue to grow and founders to set up those companies. And I think that if we can see that happen, $100 million exits, $50 million exits, plus, then the unicorns will come in the future as companies get to scale, as we see inorganic growth and continued sustainable growth across multiple geographies. Those are likely to be some of the key things that we should be focused on in the months, if not years to come. What is the general trend or shift in duration of fundraising, i.e. the time it takes to close an investment round at seed, Series A? Has the mean time increased? Great question. That is something as well that you can track on the MAGNiTT platform. In fact, one of the metrics that we want to try and put is an indicator for companies that have previously fundraised. Many times I get asked the question, do you know if a company is fundraising? We currently don't go out and ask startups if they're fundraising, but what you can do is if you have the date of previous fundraise, anecdotally, I was speaking to an investor only this week. They say a successfully funded startup in the VC landscape in the last 2 to 3 years would have been raising funds every 9 to 12 months. We then say that it takes on average 12 to 18 months for a round to be closed. Anecdotally, I can assume that the time to raising will be longer in the next 12 to 18 months. But one of the things that we would like to put on the MAGNiTT platform is a tracker that where are they in the lifespan for a fundraise compared to their previous raise, so that people can have an indication as to whether that company is raising. So that if you're a VC, an accelerator, if you're looking to acquire startups, you can at least have an indication of where they are compared to their previous investment round. But to the point of, do we have the data around the average? That's one of the reports that we'll be publishing in H1 of this year to highlight what that has been as a basis of evolution, should we call it. We did this in 2017, a funding evolution report, how many startups have raised at each round successfully, how long they have raised for each round, what is the average investment round for each of those startups at stages over the last couple of years. What is the percentage of M&A activity driven by incumbents, corporates, family offices, businesses? Great question. I don't have that specifically offhand. We do have as a filter on the platform the type of acquirer, whether it is a startup, well, it wouldn't be a family office, but a corporate as such. And you can actually even look on the MAGNiTT platform, time to exit for each of the startups. So you can see the average time that a startup has taken by year, by industry, by geography for each of the startups that are being acquired, and the breakdown of type of exit that you can see. So that information is available on the advanced analytics tool as well as on the exit tracker. And yes, Lulu, we have exactly the same thing. You can do that in the advanced analytics tool and on the directory by family offices, by VCs, by corporate venture capital, and the likes. I will be happy to share an example of that for you separately. Any other questions before I close this? I believe I've answered most of the questions that are in the group chat. How do you see investment for SaaS companies in MENA, especially for Saudi Arabia, specifically for companies who serve? That's a very specific question. In all honesty, I don't have a strong viewpoint for that. I think that in general, SaaS companies that are able to show good unit economics, SaaS as an industry becomes a lot more appealing during challenging markets. Enterprise businesses become more appealing versus consumer businesses because being able to get unit economics from enterprise tends to be easier than it is for mass scale consumer businesses. And specifically when you're going into economic challenges where consumers are likely to spend less, a focus for investors for sustainable SaaS solutions becomes a lot more appealing. But those are just my personal views rather than data-driven views. Thanks, Lulu. Do we know where funds are in terms of deployment of capital? Do you track this data, i.e. fund has X? Well, exactly what I was mentioning. If a fund has an announced value, take for the sake of argument, I don't want to give a name, a fund in MENA based out of the UAE announces in 2018 that they have raised a $100 million fund. We now track how much they've deployed. So if you go onto the MAGNiTT profile, you will see that, for instance, that fund has made 7 investments. Each investment has been at, for the sake, or 8 investments, let's say for the sake of argument, each investment has been 5 million. You will then be able to track that they have made investments of 40 million compared to the fund size that they've announced of 100 million. So yes, through the platform, you can begin to piece that together. We will begin to put more and more features to be able to calculate a fund size versus the amount of capital that was being deployed. But the first step in being able to do that is the deployed capital that each investor is now proxied on the platform. And our goal is to continue to improve that number moving forwards. So like I mentioned, 2 of the key features that we really wanted to focus on deploying on the MAGNiTT platform was, number 1, deployed capital by individual investors for each investment round. And the second was the valuations. And then from that, we can work out things like amount of fund that's been deployed, ROI of deployment of each fund, exit ROI, and the likes. How would you differentiate MAGNiTT attraction versus PitchBook? Look, each of the different platforms have their strengths and benefits. Our focus has and will continue to be the emerging market space. We believe that our strength is gaining access to data sets and information that makes it useful for our clients and users in the emerging market space to access startups for benchmarking purposes, market sizing more accurately for the markets that they're looking to focus on, contact details for the relevant parties that they want to focus on, including the founders and the VCs that I've mentioned, and the insights and the research that we create for our clients, subjectively speaking to the different protagonists that we have in the ecosystem to be able to give insights for people specifically focused on the emerging market space. We believe that our advanced analytics tool is a key differentiator because it allows our clients to use real-time data for the markets that they cover, to do benchmarking and the likes that I've mentioned, some of the features that don't exist on competitor platforms. Now, competitor platforms may have extensive data on the US and Europe. We do not have that data. We don't claim to have that data. But for anyone that is interested in the wider emerging market space, and I'm pleased to say that we're focused on Southeast Asia next and hope to have several geographies in Southeast Asia data on the platform as we continue to scale beyond the MENA, Africa, Pakistan regions. That provides our clients relevant data sets, whether it's for valuation, deployment, ROI, M&A opportunities, or acquisition and investment opportunities for the markets that we cover. Any other questions before I end the webinar? Nope. Well, thank you very much, everybody, for your time. I appreciate this. I will be sharing a copy of the video online if anyone would like to share that. If you have any questions and you would like to reach out to us, please don't hesitate to reach out to me personally at philip@magnitt.com or sales@magnitt.com if you would like to get access to the platform. I've just shared that into the webinar chat. And if you haven't downloaded the EVM report already, I will also share a copy of the link in the chat. If you have any feedback, we'd be more than happy to hear from you as we continue to develop the MAGNiTT platform. I will be soon at the MEVCA event that will be taking place in Abu Dhabi next week. I'll also be at the pack launch event, which will be taking place in the DIFC next week. And for anybody that will be attending LEAP, I'll be more than happy to meet you in Saudi in the first week from the 5th of February. Thank you very much for your time. It was a pleasure sharing the insights, and we hope for a prosperous and successful 2023 moving forwards. Thank you very much.